Right, we have gone through the different financial statements in earlier lectures on IAS 1. I'm going to re-look at the statement of profit or loss and other comprehensive income in this video. And I want us to just remember that we have to always name the company that we are dealing with. We have to identify the actual financial statements we're dealing with, which is the statement of profit and loss and OCI. And take note here, it's for the year ended 31st of December. Very different to the statement of financial position, which is as at year end. Okay, then earlier on, you'll recall that I also spoke about two different type of classifications affecting the layout of the statement of profit and loss and OCI. Now, we're going to look at the most common one, which will be 90% of your questions, where I look at classification of expenses by function. Okay, then I also need to give the years, current year and the prior year, and if there's any rounding, I need to highlight that. Okay, so here I've rounded off to the nearest thousand. For companies with billions of revenue, rand revenue, well, it's obvious that they're going to have to round probably to millions to make it fit on a neat piece of paper, right? So let's go. The first three line items being revenue, cost of sales, and gross profit. Gross profit, remember, is equal to revenue minus cost of sales. Now, these three are all having to do with classification by function, because I take all my costs of sales that are directly related to revenue and put them in a single line item, cost of sales. And in there will be depreciation, but only on a depreciation for assets such as plant, if I'm a manufacturing business, right? Property, plant, and equipment. Or if there's depreciation on what? Let's think about it. Depreciation on the accountant's computer. Where would that go? Not in cost of sales, but below the gross profit line, right? Okay, so please, this is 99% of the time, or if the question is silent on the layout, you'll assume classification of expenses by function, which means you'll have a cost of sales and a gross profit. Okay, let's continue down and put up a different color highlighter. So you'll always have other income, okay? And other income is going to be interest income, fair value adjustments on financial assets, etc. that went through profit and loss. Then your expenses, you're going to split between distribution costs, administration costs, and other expenses. Finance costs, most commonly will be your interest, not just interest paid, but your full IFRS interest, right? And we use the effective interest rate method, blah, blah, blah. Okay, but all your interest expense will go under a separate line item, finance costs. Yes, we are going to deal with share from profit from associates, but for now, I'm happy for you to put a line through that, and that is going to be a later FAC3 issue, okay, in FAC3. Then our most important line item that we get to so far, profit before tax. Take note, I will deal with the notes to the financial statement separately, but for profit before tax and income tax expense, I'm going to go deal with separate notes. Also, a little reminder that income tax is not necessarily profit before tax times 28%. There will be our current tax, as well as something which you'll learn about more in future studies, but our deferred tax expense. Okay, there's going to be both kinds. You will not be required in this subject to do fancy deferred tax calculations. All you'll need to do maybe is put in a deferred tax number and a current tax number. And those two together will come up with the total income tax expense. You then have profit for the year, which is the total. And what I'm going to make sure you understand is all of this that we've just dealt with now, up to profit for the year, is all part of profit or loss. Okay? And remember, that's what we got. Statement of profit or loss and other comprehensive income. So all we've dealt with now is the statement of profit or loss component up to the profit for the year. Okay. Then we're going to deal with other comprehensive income. Let's do a different color highlighter for that. Other comprehensive income is a whole nother type of income, right? It's all the politically incorrect incomes and losses. Okay. Now, you're going to split up between items that may be reclassified and will not be reclassified. Items that will be reclassified, we take unrealized gains, for instance, and recycle them through profit and loss. Again, not a big thing for this subject. It's going to be more to do with future studies. But understand that I'll have a whole bunch of items. Okay, there might be 3, 4, 5 different types of other comprehensive income. And I will have the income tax for that OCI separate. Because OCI is separate from profit or loss. Therefore, the tax on any OCI gains or losses is separate to the tax on profit or loss. Okay, so we split everything from OCI, we split it up totally from profit or loss. Then, you're going to land up with a total figure, and the total comprehensive income for the year is net profit, so the profit after tax, and you will add up your total comprehensive income, and that will give me total comprehensive income. So total comprehensive income is made up of profit after tax, which is P&L, plus other comprehensive income. I hope that makes sense, ladies and gentlemen. Then the standards also talk about some stuff which is not going to be really tested here, but they do bring it up in your textbook and your study guide. What we need to do is we need to also then take the net profit, the profit after tax, and we need to split it up between owners of the parent and non-controlling interest. Remember, we may have a group scenario where we have a parent company that owns 90% of this company, the subsidiary. Okay, 10% of the profits then would belong to non-controlling interest, and the other 90% would belong to the parent shareholders, right? So I have to do that split. Now, you are not going to be required to do the calculation. You're going to start with that in FAC2601, progress with it in FAC3704. But you just need to know the layout for this paper. Then I also need to take total comprehensive income, which is profit after tax plus other comprehensive income, and do the same thing. Split it up between owners of the parent and non-controlling interest. Okay, so the layout's pretty straightforward here. We've got a lot of stuff in here that you're not going to deal with, right? And then you need to do earnings per share, which is basically your earnings, your profit, divided by a number of shares. Again, not something to worry about for now, ladies and gents. So that is our income statement, or what we now call the statement of profit or loss and other comprehensive income, with expenses classified by function. And when I say by function, I mean I've got a revenue, cost of sales, and gross profit. Now, I can take the same statement of profit or loss and OCI, and classify expenses by nature. And when I do that, you will see the following. You will see quite a big change. There's revenue, and we go, no cost of sales, no gross profit. But then I take all the changes in inventories as a separate line item. I take work performed by the entity, raw materials, employee benefits, depreciation, impairments, other expenses, etc. And I list them in terms of their nature. There's no cost of sales, gross profits, then expenses below the line, right? There's nothing to worry about. The numbers are the same. It's just how we split it up. Okay? Everything else, here and afterwards, the finance costs, etc., is all the same. Okay? So it's only this top bit that's going to be different. There is no cost of sales and gross profit. Okay. Very unlikely this will come up, but just in case, you need to make sure you read the question and say whether it's done by classification of expenses by function or by nature. If the question asks for you to classify expenses by nature, then you better get it right, eh? Otherwise you're going to lose a lot of marks for disclosure. So that's nice and easy. Please, you need to know the formats. You need to know the basics. What's the best way to do that? Go and write the statement of profit and loss out. Write it out. Come back and mark it and make sure you get it right. Do that 2 or 3 times. It'll be embedded in your mind. Make sure you even write out the title so you get the title right, because there's usually a presentation mark for that. The easiest mark in the whole exam, right? Next up, we're going to see what do we do with the net profit figures, and what do we do with the other comprehensive income figures. Okay, and we're going to take them all to the statement of changes in equity. Remember, after the statement of changes in equity, we're also going to look at the notes. Okay, the notes are going to be huge marks in this exam. Let's get ready. Thanks.